The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the March 21st, the fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Okay, let's make sure we have an extraordinary one. Now, the easiest way to do that, well, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 8 o'clock in the morning. That's right. If you're listening at the normal programming time at 11:07, I'll try to make this show as pertinent as we can. But if you are listening live, I'd love to hear from you. You can send me an email. Send that to steve@tfnn.com. Inside the subject heading, please put radio show question. And, of course, if you're inside our Tiger's Den, well, then any and every ping will do. So let's go ahead and get this show started on Fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Well, we begin our day, 8:08 in the morning, with equity futures trading on the downside. You get the Dow trading down about 108 points, S&P's up 13, NASDAQ 65, Russell's down 10. Over across the pond last night in Asia, you had markets trade lower. Shanghai up 46 points. That's 1.25%, 2% for the Hang Seng, 530 points there. About 0.25% for the Nikkei, 74 points. FTSE and the DAX are trading lower as we speak this morning. Gold is up 60 cents. Silver's down 20 pennies. Copper's off in nickel. You've got the U.S. dollar index trading. It's actually trading basically flat as we speak right now. What's all that mean? You know, let's first do this here while I'm on this set of screens here. So I'm going to kind of go back and forth between my black background system, white background system. If I just do a quick market update. So here's a 9-panel screen out there. It just kind of gives you a fairly good synopsis of what's going on. So if you take a look at the upper left, you've got the, the ES Mini. What we know about the ES Mini is that it is consolidating with inside its daily profile. No idea why I'm coughing. You've got a buy zone, which is between the 55.96, 56.32 level. That's the profiles. And resistance up at 57.41. Yesterday was a slight pullback. Today is likely to be another pullback. I don't know how deep it will be, but we should get a 2-bar move to the downside. That's especially the case with the spot VIX index. That's the second chart in the middle on the upper screen that is trading above that blue line there. That blue line is the 50-day exponential moving average. When price is above that, it provides an edge for sellers out there. Now, watch 1953 throughout the day. If price is trading below that, I can assure you that the ES Mini will be targeting and trying to take out at 57.42 level once again. But as long as it remains above that, sellers are the ones with an edge. If we take a look at the NQ, also a consolidation with inside its profile. Now, it is bearish in structure. Bearish in structure suggests that when price is below the center of its profile, which is at 19,946, which it is right now, price should make its way down to the bottom of the profile at 19,546. So that's what you'd be looking for there. In the case of the U.S. dollar index, it has regained its a profile level on a weekly basis. It's going to confirm a TD9 count bottom pattern. We'll take a look at the U.S. dollar here momentarily. Gold attempting to form a new profile. This profile has shifted a few different times this morning, but right now you've got a buy zone between 29.72 and 3,003, and you have resistance up at the 30.65 level. Silver is trading. It doesn't have it's got a TD9 count top, and may be pulling back to test the top of its profile at 32.99. Light sweet crude has a buy the D point bottom. It is trying to take out resistance. It's struggling to do that. That's the top of its profile. That's at, that's just trading in the center of its profile, which is at 68.05. If it can close above 68.05, it increases the odds will move to 70.19, the top of its profile. Natural gas, which we're going to look at in detail for Ron during the show, is pulling back in its test. So it's got a top out there. It's got to sell the D-point top. And price is pulling back and it's testing support. And support is $3.82. And finally, the 30-year Treasury, which has a sell the D-point top as well, has pulled back, is just consolidating with inside its profile. It right now is testing resistance, which is up at the 118.15 level. So that gives you a decent overview of what's going on. If we let's move from here and go take a look at international markets. What do they mean? So I'm going to go ahead and change screens here. We'll go to my white background screen. Hopefully I keep track of which screen I'm on. Unfortunately, the system that we use here doesn't really designate it that easily for me to see immediately. But here we're taking a look at the Shanghai Index. We can see the Shanghai Index. It doesn't actually have a topping pattern. What I mean by that, it doesn't have a sell the D-point top, it doesn't have a TD9 count top, it doesn't have a Rhodes momentum indicator signal, but price did close today below its green oscillator and change line. So it has lost its momentum, and that suggested it could pull back even further. You've got a little swing point, maybe it's targeted swing point way back here from March the 4th level. Maybe that's up at the 34.87 level. The Hang Seng, we had a request from GTE yesterday. The question was, has this formed a top? And the answer, and we're going to take a look at the daily, the weekly, and monthly. On the daily chart, which we covered yesterday, had that Rhodes momentum indicator top. We've got follow through to the downside today. If you take a look at the Nikkei, it has a sell the D-point top. It's generated two bearish shooting star candles out there, so it's signaling to you and I that price wants to move back to its oscillator and change line. That's at 37,218. In the case of the FTSE, it has a nice Rhodes momentum indicator top. What it did, this rally here rallied right up into that green oscillator and change line, which it gave it up. So it's lost momentum as we speak right now. In the case of the DAX has got a really large consolidation. The top of the consolidation, where my cursor goes, at about 23,470 level. The bottom of the consolidation, right around the 22,266 area. The question is now with price, it's got a Rhodes momentum indicator top. Price couldn't bust out those highs. Is it going to try to bust out those lows and get back to the bottom of the consolidation? I'd say odds favor possibly yes. I can see that today is a 2-bar pullback out here. If we close below yesterday's low out there, and yesterday's low is at the 22,736 level, then yeah, I would say that's a more likely outcome. If we hold that level, right now it's just a 2-day pullback. So that's what's going on those international charts out there. I'm going to switch over and take a look at the Hang Seng. So we can see, the question was, has this formed a top out here? Where did I put that? Here we go. So now we're going to have the daily, the weekly, and the monthly time frame. And the answer, look, this is the full-out answer to the question. Has the Hang Seng made a major top? The answer is no. This thing negated it's on a monthly basis. That's a chart that I'm going to first start with. It negated it never formed a TD9 count top. Instead, what it has an A to B equals CD pattern to the upside. At GT, you had a price level objective, and no, that's not it. It's higher than what you were thinking. It's likely going to go target the 27,093-ish level. Now, we are in bar number 8 on the weekly time frame. So the weekly time frame can be setting up for a little bit of an intermediate term pullback, and we'll talk about that as soon as we get back from this break.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstad's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstad releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
Welcome back, folks. So we're taking a look at the Hang Seng out here. We're looking at the monthly time frame. It's got this nice A to B. We'll see the pattern to the upside. Eventually, we'll get up towards the 27,000 plus area. It may have a little bit of a short-term pullback out here, maybe more than a short term, because the intermediate term time frame chart has bar number 8 of a TD9 count. Now, it also has a Rhodes momentum indicator signal, but that requires a bearish reversal candle. A red candle does not mean it's a bearish reversal candle, and it has not formed that as of yet. Now, in order for this to form a TD9 count topping pattern come next week, price is going to have to close above 22,941.32. So that's what's going on with regard to the Hang Seng. I'm going to go ahead and close out these charts here as we start to shift towards my other system. So just give me a moment here. We're going to go take a look at the U.S. dollar index. Well, we'll start off by taking a look at the euro. So here, when we take a look at the euro, I'm going to open up the monthly time frame chart. So what the euro is communicating to you and I is that the Russia-Ukraine war should come to an end. Now, how are we making that? We're following the money. We're following the currency here to help us try to answer that question. Now, we take a look at the top here in the euro. One that we're looking at, there was a nice TD9 count top that formed way back in 2008, April of 2008. We're looking at a monthly time frame chart, by the way. And you can see that we've been moving lower ever since. I don't expect that to stop. All right, so just so I want to be clear there. I'm not saying that the euro has made a big bottom or anything. I'm just saying that if we take a look at, so I've identified out here on these black diagonal, black horizontal lines, different major Russia events, such as invading Crimea. We can see that the euro just simply got crushed after that. Then the next thing we had is Russia invading Ukraine. That became a ceiling. That is still a ceiling out there. The euro continued to move lower. Then we had Ukraine fire a U.S.-made a missile into Russia, into, I don't know if it was in Moscow or where it was lobbed into, and that set up a resistance point. Now, the month is not over, but you can see we've taken out that area out there. So that tells us, or tells me, that that's what the euro believes, that war is going to come to an end. At this stage here on the monthly, so that's the monthly chart. Let's go see what its signals are to us. Let's go see what's going on a weekly time frame and a daily time frame. We take a look at the euro. Here we take a look at the euro. It most likely on a further rally is going to go target its TD9 count breakdown level. And that's up at the 1.208 area. That's at least what the weekly time frame chart is telling us. If we look at the daily time frame chart, the daily time frame chart as a sell the D point top. You can see the A to B equals CD pattern. Price right now is below its green oscillator and change line. That tells us that it's lost its momentum and that we should likely head a bit lower out there. So the euro, now are we going to head lower out here? Well, the euro may do that, but if we go from the euro, which we're going to do, we're going to close out these charts, then we're going to go take a look at the U.S. dollar index. Now, of course, we know that the euro is the largest weighting inside of the U.S. dollar index, about 57.2%, if I'm not mistaken. I may be mistaken, but so right up around the 58% level. We'll come back to high-grade copper in a few moments, but first let's get to the U.S. dollar index. Here we go. Now you take a look at the components. So we've really covered the euro. We've talked about the topping pattern that it has out there. May head lower. This is going to be perhaps yesterday was day number 2 to the downside. If you take a look at the U.S. dollar, Japanese yen, the euro, the exact weighting is 57.6% of the weighting. If you take a look at the Japanese yen out here, this has formed a buy the D point bottom. So there's your A to B equals CD. Price should rally. If this rallies, if the Japanese yen is rallying, it's getting weaker, the dollar would be getting stronger. If the euro is moving lower, the dollar is getting stronger, the euro is getting weaker. The Great British Pound has A to B equals CD pattern to the upside. But price right now is trading below its oscillator and change line, so it's lost its momentum out there, but it doesn't have a top, whereas the Canadian loonie, it's got a nice TD9 count top. As long as price remains below its oscillator and change line, that's at 143. Price is likely to go target its breakout level at 141. If we take a look at the Corona and the Swiss franc out there, the Corona has a buy the D point bottom. The Swiss franc has a buy the D point bottom. Both of those are likely to rally. And then in the case of the U.S. dollar index, now this is the daily time frame chart that I've got out here. Let me do this. Let me open this up. And this is waiting for a bullish reversal candle to confirm a buy the D point pattern. But I'm going to switch this over to the weekly. Let's see what happens out here. See if I can grab enough data. But what we should notice is that, so I just got to maybe just kind of slide this like this a bit. That's not really going to work. What you should, how do I do this? How do I do this? I know how I should do this. Give me a moment, folks. I've got a way to solve this problem. It's going to whoops, didn't mean to do that. So let's just open up this set of charts here. It'll take just a moment to populate. This way we'll be able to take a look at the weekly time frame chart, and you'll see what I'm looking at. What you're going to see is you're going to see bar number 9 is going to go ahead and confirm today. So you have a solid TD9 count bottom on the weekly time frame chart for the U.S. dollar index. But again, its ingredients are coming from those other 5 currency pairs that we were looking at. The second chart from the upper left is the weekly chart. That'll populate here momentarily, and there we ought to more clearly see that TD9 count bottom pattern. Now, on a TD9 count bottom pattern, it can be the bar following bar number 9 that makes that bottom signal out there. So we have a confirmed TD9 count, but we will complete that pattern next Friday out there. So that's what's going on. So that is suggesting that we rally out there. And if we get that bullish reversal candle inside the U.S. dollar index, that's going to suggest, or even just close above the center of its bullish structured profile, which is at 103.53, we should rally up to the 104.20 level. So that's what's going on with the U.S. dollar index. Let's try to kind of finish this off here with some commodities. Here are 6 different commodities. We've got the May wheat futures contract that's got a TD9 count bottom pattern, price consolidating with inside its profile, support 536, resistance 569. The wheat contract, the May soybean contract is got a buy the D point bottom pattern with a consolidation with inside its profile, 1,250 support, 1032.25 is resistance. The May contract for corn has a TD9 count bottom pattern. Watch 470.83. If price is able to close above that, the top of its profile, we'll see a further rally. Support between 457 and 459. You've got coffee that is consolidated with inside its profile. That's between 372 and 401. We've got sugar that has a TD9 count top, but price is traded above profile resistance and its oscillator and change line. Price is going after that TD9 count top. A close above 2009 says coffee or sugar gets even more expensive. And finally, cocoa has made a Rhodes Momentum Indicator bottom pattern. Price is testing profile support as we speak right now. The last commodity that we'll take a look at this moment in time is going to be high-grade copper. Now we'll take a look at high-grade copper and natural gas. Here, if we take a look at high-grade copper, the monthly, you can see it's breaking out of a consolidation pattern. Today, we're going to negate a weekly TD9 count top. We do not have a topping pattern inside of the daily time frame. A bearish reversal candle would confirm a Rhodes Momentum Indicator top, and that would suggest a retracement back to the $5 area out there. So that's what's going on with copper. So we come back from this break. We're going to go take a look at natural gas. We're going to take a BLFI for SAT-P, PATH for SAT-P, the ES, the NQ, the YM, the Russell for Brent, and anything else that we get a request for. Steve Rhodes with TFNN. We'll be right back.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. A slight change in plans here while my other system gets up and running. Right now, we've got U.S. equity futures trading to the downside. It is 8:30 in the morning. If you're listening live, we're trying to make the show as pertinent as we can for you, but change it up just a little bit because we've got, we're just taking a look at the futures market, not the cash market. But we've got the ES Mini down 17, NASDAQ 82, Dow's down 135, Russell's off 13, gold's off $1, silver's down 23 cents out there. The question should be, has the market bottom? And the answer to that question, I believe, is yes. Why is the answer yes? Well, I'll share this chart with you now. Subscribers have seen this. You may have seen this in the past before. But what this is, you've heard me talk about it. We were talking about all last week or the week before, which when the Spot VIX Index got into contango. What does that mean? That means that the Spot VIX Index itself was trading lower than all the forward future contracts. I'm talking going out to November of this year out there. There's another tool that there's another tool that you can take a look at. There's a index for the 3-month, the 6-month, and the 12-month Spot VIX Index. And when you take a look at that ratio, when it goes above 1, it tells us that we are in contango at that stage here. When we come back below 1, and that's the green arrows, the chart on the very left-hand side is for the 1 year. On a 1 year basis, being able to get in contango out there, it's really hard to do. It doesn't happen anywhere near as often as it does for a 3-month and a 6-month when they all do it at the same time, which is what we just most recently had. And those are followed up by those green arrows. You can see the other green arrows that are out there. We typically have some type of bottom. Now, is it a bottom that's going to be the major bottom out here? Well, it's a possibility. Why would it be a possibility? Let's take a look at that's the S&P 500 that we're looking at. Let's take a look at the seasonal patterns out here. Let's put up the S&P 500. Let's go ahead and pull this back for as many years as we can, which is 97 years worth of data. Let's put in where we're at today. You can see where we're at today. You can see we're in the favorable seasonal cycle. The favorable seasonal cycle typically, the so-called sell in May, although that's not really the best sell out there. But you can understand, seasonally speaking, why people say that out here. May is typically a very soft month if you look at the very bottom right panel. If that's not good enough for you, what we can do is if we take a look, we are in a post-election year. And so if we just put this on a post-election year cycle, what this tells us is that we are entering this period of a bottoming pattern. And with that, now we don't necessarily use the seasonal patterns from a timing to the day standpoint. We're using it from a trend issue. And here from a trend issue, this suggests that a bottom typically forms between March 22nd and April 8th, or basically that we might chunk around and might really consolidate around. Again, this is the seasonal pattern for the first year of every presidential term. I'll just turn off 25 out there. So here is the cycle that you can see that we're in, and things should really get cooking to the upside come April. Now here, if from an analog standpoint, price was following this, is it? Here I can put up. Oh shoot, it's going to be too hard to do that. I'm not going to compare the year right now. But if the markets, if the S&P were to follow along this path here. The sell doesn't come until August. It's not a sell in May. It'd be a kind of a sell in August type of a scenario. So when you put these patterns together, the seasonal patterns together, with regard to the signals that we got from that Spot VIX, be careful to the short side out there. I mean, I'll open up this chart. This is which time frame? There's a 6-month time frame chart out there. You can see these signals. They're absolutely worth paying attention to out there. All right. So now my other system ought to be up and running out here. We can go take a look at natural gas, which is what I promised. So we'll take a look at the monthly, the daily, the weekly, and an intraday chart, the 30-minute time frame chart. Now, the daily time frame chart, you're going to see a Rhodes Momentum Indicator top. That was confirmed with that bearish shooting star candle. And what price is doing right now, it's pulling back to test the bottom of its profile, which is at $3.82 out there. Now, does it have to get all the way down to the bottom? Not necessarily. You can see that today may be a 2-day pullback out there. And if that's the case, and you're looking to enter a long position inside of natural gas, right now may be that time. The confirmation that right now may be that time would be a close above $3.981. That's on a 30-minute basis. That is its TD9 count breakdown level. So we can see here that on a 30-minute time frame, we had a TD9 count form that was at 2230, and that was at yesterday. So 2230, we get a nice TD9 count bottom. Now price has been rallying. It's taking on profile resistance. If it can close above 394 in 25 minutes, which would be 9 o'clock, it's suggesting a profile change in trend. Price would go over and take a look at trying to get above its breakdown level, where price broke down was at 3981. So Ron, if you're looking for a long position inside of natural gas. If you get it closed above 3.981, it increases the odds that you're going to see a rally, especially knowing that the daily time frame has gotten back towards the bottom of its profile. Now, if price were to close below 382, that would be signaling that we would likely see 373. That would be the weekly oscillator unchanged line out there. So I hope that helps you out with regard to natural gas. We had a request from SatP to take a look at ticker symbol BLFY. So let's get that fired up in here. Again, we're going to take a look at the daily, the weekly, the monthly, and the 30-minute time frame charts. And SatP wants to take a BLFY and path, looking for an entry position. He says just a few shares out there. When I look at the daily time frame charts, kind of hidden right now, what do we see out here? Well, we can see that price is trading below profile support. So that's never a good thing. And right now, price trading right. It closed yesterday below its red oscillator and change line. And that's at 934. As long as price remains below 934, what price may do is get back to 897 or at least test this hammer candle low. The hammer candle low from back on the trading day of March 18th is down at $9.10. Was that a buy the D point pattern? Well, maybe it was. Let's take a look at this. Here's our A to B line. Let's just move that over to the C point. Absolutely. So you actually have a buy the D point bottom pattern. This formed out here on March the 18th. With that bullish hammer candle. Now, the coolest thing about a bullish hammer candle, especially in sessions, let's say 3 through 7, today's going to be session 3, is the ideal place to buy it is about the center of the wick of the hammer. Now, I'm just spitballing here. It looks like it's maybe around 920 or so, 917. Sat, you can go ahead and open up the chart, look at the candle session for March 18th, take a look at the where the midpoint is of that lower candle, that lower wick out there, and that would be the midpoint. That would be a nice place to buy. I wish I could tell you that I had a buy entry on the 30-minute time frame chart. I don't really see it here. It doesn't look like this has a ton of volume in it. What was the volume yesterday? Yeah, 33,000 shares. You can tell on the 30-minute time frame chart out here. So I don't know that the 30 minutes. Look, a buy area would be $9.18 out there. But I think you have your buy signal, at least for the daily time frame. On the weekly time frame chart, let's open this up. Do we have anything with that big old bullish engulfing candle? Right back here, the answer is no. So you just have a consolidation inside that weekly profile. Nothing broken there. And on a monthly time frame, also a consolidation going on. We come back from this break. We're going to go take a look at Path, and we'll start taking a look at a deep dive into the equity future contracts. This is Rhodes with TFNN. We'll be right back.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening Call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The reality is that navigating financial markets can be risky. Markets can be chaotic and difficult to understand. Having the latest market advice can help you turn this chaos into a key for creating winning trades. At TFNN, we understand that it can be hard to find reliable market news. That's why each of our market experts offers their very own market newsletter, a must-have tool for every trader out there striving to find an edge in today's markets. TFNN newsletters cover every aspect of the markets so you can analyze the market before you trade. Try any of our great newsletters risk-free with our 30-day money-back guarantee. Just visit the Newsletters tab on the front page of TFNN.com. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foresight Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So in that last segment, perhaps the most important thing that we covered there was the relationship between the spot VIX and its futures contracts, and when they go into contango, which here we've got happened both for the yearly, the 6-month, and the 3-month time frame. When they get out of contango and they dip below that that positive 1 level out there, they typically identify significant bottoms. So that's what we have in place right now for the S&P 500. Let's go take a look at the request here from SatP to take a look at ticker symbol PATH. PATH right now closed out yesterday at $10.82. It ran into daily resistance out here at its oscillator and change line at $10.99. This had a nice gap to the downside about a week ago or so, negated a TD9 count bottom signal. Looks like it also went ahead and formed a new A to B equals CD pattern to the downside when it took out that TD9 count bottom. So that's in the daily time frame. The reason we're looking at path is because SatP is taking a look. He's looking for an entry area out there, and the question is, do I see it? If I take a look at a weekly time frame chart, August 9th was a swing point of 2024. Volume there was 58 million shares. It was tested and rejected last week with 131 million. This week so far, it's done volume of 53 million shares, again going into 58. So this continues to push into that weekly swing point with volume. I don't see a bottom here. I don't see anything inside of path. Now, look, if it closes above 1099, which it most certainly can do out there, you did have a 2-day rally, then your resistance zone is going to be between 1160 and 1203. It is that zone where any counter trend move should come to an end. That was a bullish structured profile that we've been below for more than 2 consecutive sessions. So, Sat, I hope that helps you out with regard to that. Let's also take a quick peek here at Marvell. This is for Satish out here. Marvell, you were looking for, what was that? Actually, I don't even remember. I'll just take a look at it. So we take a look at Marvell. This is consolidated inside its daily profile. Support range is at 66.57. Resistance up at 78.27. On a weekly time frame, I see a Rhodes momentum indicator top. I don't see any kind of a bottom signal. You are in bar number 8 this week, but it's not the low of the pattern. So that's not a bottoming pattern out there. That's suggesting maybe if we do bottom, we get the lower price. The monthly time frame, which has a Rhodes momentum indicator top, is traded into its buy zone. That's between 60.62 and 75.48. If I open up, let me just open up the daily time frame chart out there. Nothing else to really assist us, but I don't see a bottom pattern as we speak just yet. Inside of Marvell, I just see a consolidation. I think odds favor price moving back more towards 60.62, the bottom of that monthly profile. We are trading below its breakout level on the weekly time frame as well. Now let's go take a look at the daily equity future contracts. Let's take a look at all four of them at the same time and see what we see out here. So we know that the spot VIX index and its contango gave us that signal. Now, all patterns do fail out there, right? So it's not a certainty, but it is a pretty darn good certainty out there that we should see more of a rally. But we're not going to see any more of a rally until price is able to bust out of its profiles. And that's what's going on right now inside of all four equity future contracts. They are trading with inside profile. So in the case of the ES Mini, it's got a buy zone between 55.96 and 56.32. It's got resistance at 57.41. Today looks like it'll be day number 2 of a pullback out there. That is a normal pullback if in fact this is a bull market out there, or we're at least going to see a further rally. Let's just leave it like that we're likely to see a further rally. So 2-day pullbacks are very normal out here. Especially if price is just pulling back in towards its buy zone. If we take a look at the NQ, and the NQ, the question is that I've got here from John, will price take out its March 13th low out here? The NQ, the low I actually have is from March the 11th. That low out there is, maybe I wrote it in the wrong date out there, but 19,345.75. Is it going to take it out? Well, let's just say right now, I'll take a look at the daily time frame charts. I'm going to go with the answer is likely not. That's based upon that spot VIX set of charts that we took a look at out there. But profile support out here, 19,546. More likely than not, we're going to get a 2-day pullback, and then we get a further, maybe a further couple-day rally. Remember that seasonal chart that we looked at? We could be in just kind of a sideways choppy market here for quite some time. If we take a look at the Dow equity future contract, beautiful TD9 count bottom out there. Again, it's got a bullish structured profile. Right now, price is just dealing with its oscillator and change line. But again, likely to be a 2-day pullback here. The same thing for the Russell 2000. It has support at 2037.10, resistance at 2113.40 out there. Now let's start taking a look at the intraday charts for the equity futures. Let's start with the ES Mini. If we take a look at the ES Mini, we don't need to spend any time on the daily time frame. We need to take a look at other signals. What are the other signals that we're looking at? Well, one that I'm paying attention to would be the 60-minute time frame chart. So we've got another 12 minutes before the show comes to an end. We can see that price is taking out, or is trying to take out, 56.82. I don't know if we're going to close below 56.82, but if we do, it's a level that's been tested in essence a few times. And if we do close below it, that would suggest that we had lower. So what we're looking for now on the ES Mini is, where's the next level of support? Is there a next level of support that we can easily see out there? Well, it turns out that next level of support is either the 4-hour and 5-hour profile area. So price had pulled back into its buy zone on a 5-hour time frame. That's between the level here of 56.68 and 56.80. If we take a look at the 4-hour time frame chart, it is also 56.68. So 56.68, which is the area that we're testing right now, that is its next key level of support out here. If price closes below that, that suggests that we had lower. The next head lower level would be 56.61 out there. Now, what I don't see out here, what I do see on that, I overlooked that on that 60-minute time frame chart. The 60-minute time frame chart is completing a TD9 count bottom pattern. So while we are pulling back to nice profile support on the 5-hour and 4-hour, come 9 a.m., when I'm done with the show, you're going to have a completed TD9 count bottom. That says that we should at least rally to 56.82, more likely 5,700 or so out there. So that's what's going on. We take a look at the ES Mini. Let's take a look at the NQ out here. Again, this is going to take just a moment or two to populate, but that's okay. Hey, how about the March Madness? It got started yesterday. I think I'm still doing okay as we speak, but I tend to my brackets tend to get busted, it seems like. So, in fact, I can't point to any real winners that I recall. My wife does better at it. Oh, for the viewers, if you're asking why am I doing the show early today, not that anyone was asking, I will leave here. I'll depart here shortly after the show, and we'll drive over to Naples and take my mother-in-law out for her 97th birthday. a little birthday brunch and lunch out there, and she's got all her faculties for the most part. Her mental faculties out there. Memory's starting to wane a little bit, but shoot, my memory is waning all the time. But any event out here, so that's what I'm going to do. So we're going to be celebrating life. That's a beautiful thing. Here we take a look at the NQ. You can see the NQ on the 60-minute time frame. Also going to go ahead and complete a TD9 count bottom pattern out here. The NQ's next level of support, if that level doesn't hold, is going to be 19,583. That's the 5-hour TD9 count breakout level. You can see on the 2-hour time frame, price is testing this breakout level as we speak. We'll be right back.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Welcome back, folks. We're taking a look at the stock charts here for Wolf. The question is, has it bottomed? The answer is it has a daily TD9 count bottom. That went ahead and formed on March the 6th out there. And you have a monthly TD9 count bottom. It's going to go ahead and complete this month. On a weekly time frame, we're still below profile support out here, so it's a struggle. $8.12 is a resistance point out here, but you certainly have a bottom on the daily and the monthly time frame out there. There was also another question about Nike. Nike trade out at $66 and change as we speak right now. The question is, how far will this head to? Nike went ahead and confirmed a A to B equals CD pattern to the downside the month of June June 2024. It took out its TD9 count bottom, its swing point, which was October 2022, 200 million shares, and it was taken out with 306 million shares. So over time, Nike headed towards this 35-ish type area out there. Not saying it's doing that overnight or anything, but it does have that confirmed A to B equals CD pattern to the downside. We go back to the intraday charts here for the equity futures. If we take a look at the Dow equity future contract, here, what do we see? Where is the next key level of support? Well, all of the 60-minute time frames are forming bar number 9 of TD9 count patterns out there. You're looking at the lower left. That suggests that here, this pattern is going to go ahead. Now, the pattern will go ahead and complete at 10 a.m. I think that's the hourly chart that we're looking at. So you're going to have confirmed TD9 counts as we come into 9. The pattern will complete at 10. I would expect we would see the market start to rally sometime between 9 and 10 this morning. Out here on a 10-minute time frame chart, looks like you're going to get a TD9 count bottom as we come into that 9 a.m. time frame as well out there. So thanks for joining me, folks, for the early show out there. And I want everybody to have a fabulous, wonderful weekend, a fabulous Friday. And I'll look forward to seeing you again on Monday. I think, let me see here. I think I will do the market update. Absolutely. So I'll be back with you to the 9 o'clock market update in just 3 minutes. We'll be right back.